The justification of the RSI period 14. The justification of the RSI period 14. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for RSI trading. Our website is www.dayprotraders.com. The title of this video is the justification of the RSI period 14. Let's get started. All right. Why the period 14? When you are using the most trading software, the default setting for the RSI indicator is period 14. All right. You also notice that for the CCI, the default setting is period 14. All right. For most technical indicators, the default setting is 14. Why? Okay, we use the setting 14. All right. So for that explanation, that clarification, why we use period 14, I'm talking about the RSI period 14, the justification of the RSI period 14. Why do we have for most technical indicator the period 14 as the default setting? As a technical indicator, it's very important to know why we use most trading software will set most technical indicator for the period 14. You will see the CCI, the default setting is 14. The RSI, or the relative strength index indicator, the default setting will be set at 14. Why do we use the period 14? It is very important for technical traders to understand why we use a period of 14. This is about the justification of the RSI period 14. Let's get started, all right? So when we are using the RSI period 14, what is the best time frame one should apply? Originally, what is the best time frame for using the RSI period 14? Same thing for the CCI period 14. When one is using a technical indicator, which the default setting set at 14. Why? Which is the best time frame to apply that setting for? All right. So one should understand, very important, that in the financial market, everything is selected carefully. It's not by mistake that you will notice on most trading software that the default setting for the relative strength index indicator is set at 14. All right. Now, if you consider the year, the financial year, we have 52 weeks, 52 weeks in 1 year. All right. Now, in 1 year, we also have 4 quarters, So 1 quarter is formed of 3 months. So I'm on a quarterly chart here. Each candlestick bar represents 3 months of financial activity, all right? So a quarter is a 3 months. So if we divide 1 financial year into 4, we have 4 quarters, So in 1 year, first thing you need to understand, we have 52 weeks, all right? And we also have, 4 quarters. Each quarter is, composed of 3 months, But now, if we divide 52 weeks by 4, we will have 13 weeks. So in each quarter, we have 13 weeks. All right, but instead of using the default setting 13, the market has decided to use period 14. So one of the reasons why we use the default setting 14 is because we have 52 weeks in the month, and if we divide that 52 weeks by 4 by quarter, we have 13 weeks. 13, the number 13 being a bit of negative number in many people's mind. the market prefer to use period 14. This is why you will notice on most trading software that the default setting is 14. Therefore, the best time frame for using any technical indicator with the default setting 14 is the weekly chart. All right. So when one is using the CCI period 14 or the RSI period 14, originally, the best time frame for the period 14 is the weekly chart, because 13 week is 1 quarter. Instead of using 13, we are using 14. That's why you see many trading software we set the default setting at 14. All right. There are another reason for it. All right, I recommend to traders to watch the full length of this video, because this is not only the reason why we should use period 14, and I will also explain to you why sometimes we can use period 14 on the daily chart. So stay with us and watch the full length of this video so you may know what is happening in the financial market. Most big market players, the hedge fund, the investment banks, are position traders. They are not day traders. They are not swing traders. They are position traders. And they trade, on the weekly chart. All right. So when they are trading on the weekly chart, big market financial, market participants are trading on the weekly chart. They set their default setting to 14. All right. So they are combining the weekly chart with the quarterly chart. So when they see the RSI period 14 on the weekly chart, they will validate that oversold or overbought RSI period 14 on the weekly chart on the quarterly chart. So position traders, the number one time frame that they are combining, the number one time frame that they are using is the quarterly chart. So they will use the quarterly chart for their trading setup, and they will use the weekly chart for the signal. Therefore, most technical indicators, including the RSI period 14 or the CCI period 14, those position traders are applying the period 14 on the weekly chart. So for instance, you see here, I have some line on my chart. This is a very good one here. The RSI period 14 is oversold at this point in time. This is a very good trading setup, and I'm going to explain to you why this is a very good oversold, RSI period 14. There is another one here in this session here. This is a very good RSI period 14. If we consider the position traders, what they are doing in the financial market. Another one here is a very good, RSI, this is not, here, it couldn't touch it properly. Quite close, quite close here. This is another one very good oversold, RSI period 14. It didn't touch the oversold zone, but it formed a double bottom here, almost touching it. This is another very good oversold, RSI period 14. So when they see like this, I will explain. I don't want the video to be too long. Here, I know that this is a very good one. This is where, the position trader, the hedge fund, the big financial, market participant will enter the trade, allowing the price, to go up, So I'm going to switch now to the quarterly chart. So they see oversold like this. Now they go to the quarterly chart. In fact, the trading setup is on a quarterly chart. What are they looking for? All right. In fact, there's another one here. This one here, in this section here. I'm going to place a vertical line, and I'm going to go to the weekly chart. This is the one I'm talking about. It's a very good one here on the quarterly chart. What has happened here? The price form, a high, and then pull back, break above the previous high, and retest it here. All right, retest it here. So I'm going to place a vertical line, break above, retest. All right. So on the quarterly chart, this is a bullish, trading setup. Here again, breaks above, the orange line here, and was retesting it here. This is also a good trading setup, a bullish trading setup. Here again, the position traders will be watching the reaction of the price here. It breaks above the orange line and is retesting here. So pay attention to the okay, vertical line. Then I'm going to switch now to the weekly chart, and you will see clearly, you see the vertical line here, the RSI period 14 is oversold. This is what I'm talking about here, this zone here also is oversold. And this is another one on the weekly chart. I'll remove this one instead, and I'll focus on the quarterly chart. There is another one here when the RSI period 14 is also oversold in this zone here. Okay, this is the point where the smart money will enter the market, because on the quarterly chart the price breaks above a key levels or the previous high and was retesting it, break above, retest on the quarterly chart, and then they go to the weekly chart. If the RSI period 14 is oversold, they will use a top-down trading method to trade it. All right, it makes sense. So we are using quarterly charts, for the trading sector, weekly chart for the signal, and the 4-hour chart for the entry. This is how the position traders are trading. That's why they are using the setting 14 as the default setting. Most professional traders, the hedge funds, the big financial institutions, are using the RSI indicator, especially the RSI period 14. This is about the justification of the RSI period 14. Breakable, retest on the quarterly chart, RSI is oversold on the weekly chart. Those market participants will use a top-down trading method, quarterly chart, weekly chart, and a 4-hour chart for the entry. A position trader will remain in the market for 1 year, may remain in the market for 1 year or more. So they take position and they do not move, and the price will continue to go up. And they may continue, if they buy here, for instance, here, this is another buy, they will continue to buy because they want to remain in the market for long. So they may take position here, load it here at this point in time. Pay attention to, I'm going to color this one now into orange, vertical line. Pay attention to the orange vertical line. I'm going to switch to the quarterly chart. What the price has done at that point in time, the price breaks above the previous high and was retesting it here. You see the tail of this candle here was retesting it here. From that point onward, they will buy, what I call accumulation will take place here, and they will remain in the market for more than a year or so, all right? This is how they are using the RSI period 14. Quarterly chart, weekly chart, and 4-hour chart for the entry, all right? It makes sense? There is another reason why, we use RSI period 14. When we consider, the monthly chart, so in the financial market, the monthly chart is considered as 20 days, though we have 31 days week month, we have 30 days month. Generally, in the financial market, the monthly chart is considered as 20 days, all right? 20 days, If you do 70% of 20, all right, you will have 14. So you multiply 20 by 70 divided by 100. That's 20 multiplied by 70%. If that will give you 14. Now there is when you are trying to analyze a group or a substance, all you need to do, there is a consideration that 30% is a dispersion in normal condition, and 70% will represent the core value of what we are studying, all right? All right, are you getting it? All right, this is about core value. So the core value of 20 is 70%. The core value of any item that we are analyzing is 70% because we consider 30% as a dispersion in a normal condition. This is very important. In a normal condition, 70% represent the core value of an item. So if I want to study one group, or a group of 100 people, if 70% of the group say yes, I will say that the group has agreed because 70% represent the core value of the group, all right? So when we are analyzing, the monthly chart, instead of focusing on the monthly chart completely, which is 20 days, we want to concentrate on the core value of the monthly chart, which is 70% of the month. okay, 70% of the month. So instead of using 20, we prefer to use 70% of 20, which is 14. Therefore, one can also combine, okay, the monthly chart and the daily chart. So one can use, okay, professional also use the setting 14 on the daily chart when they are combining the monthly chart and the daily chart. All right. So one will look for the trading setup on the monthly chart. One will now analyze, okay, the technical indicator RSI period 14 on the daily chart, okay, which is the signal, and one will use the hourly chart for the entry. So monthly chart for the trading setup, okay, CCI period 14 or RSI period 14 on the daily chart, and okay, hourly chart for the entry. In this case, we are focusing on 70% of 20 days representing the month. All right, this is another reason. We can combine also, all right, the daily charts and the hourly chart. So we can use the RSI period 14 on the hourly chart. In that case, we are looking for the trading setup on the daily chart, trading setup on the daily chart, and we are using the RSI period 14 on the hourly chart, or CCI period 14 on the hourly chart. But when we are using the CCI period 14 or the RSI period 14 on the hourly chart, we must refer to the daily chart. In that case, we are considering 70% of 20 hours. In the financial market, a day, one day, we do not say 24 hours, we say 20 hours, all right? So remember those things, very important. So if we do 20 times 70%, talking about the core value of 20 hours is 14 hours. So instead of using 20, the setting for 20, we concentrate only on the core value, which is what we call the true value, because 30% very often will be a dispersion. So 30% does not, the 30% of 100% very often, okay, may exceed, okay, the 70%, all right, the average of the 70% is considered as a dispersion in a normal condition. Therefore, we are focusing on the integrity, so to speak, of what we are studying, and the integrity of the item that we are studying, or the core value of the item that we are studying, is represented by 70%. So we can combine daily chart, okay, and the hourly chart, okay, for the RSI period 14. So we are using the RSI period 14 on the hourly chart, but we must find a trading setup, as I show you here. Price breaks above a key level on the daily chart and retesting like this. The RSI period 14 is oversold, all right, on the hourly chart, all right. Okay, then we will go to the 10-minute time frame for the entry. We can also, all right, for typical scalpers, we can combine also we can use this the RSI period 14 on the 3-minute time frame. So what are we doing? We are considering, all right, we are considering, all right. So if you say 1 hour is 60 minutes. All right, my friend. All right, it's 60 minutes. All right. All right. If you divide that 60 by 20, is what you have? You have 3. Okay, 60 divided by 20 is 3. Therefore, we are on a 3-minute time frame. But instead of concentrating on 20, we are concentrating on 14. So we go on a 3-minute time frame. We are applying the RSI period 14. Or any technical indicator with the default setting on a 3-minute time frame, we must look for a trading setup on the hourly chart. So breakable, retest on the hourly chart. RSI period 14 is oversold on the 3-minute time frame. All right. We can go now maybe to the 1-minute time frame, at least 1-minute time frame, to enter the trade. All right. So we can also use period 14 on the 2-day chart. If you are doing it on the 2-day chart, we must use the RSI period 14 on the 2 hours time frame. Because if on a daily, if you combine the daily chart to the hourly chart, all right, which I already mentioned, we can combine the 2-day chart with the 2 hours chart. I prefer that swing traders use the 2-day chart and the 2 hours chart. So we are using the RSI period 14 on the 2-hour chart, or the CCI period 14 on the 2-hour chart. Therefore, we are looking for a trading setup first on the 2 days chart instead of 2-day chart instead of daily chart, because on the daily chart we have a lot of distortion. So remember that primarily, the reason, number one reason why you see most technical indicators flashing 14 or using 14, especially the relative strength index indicator setting, the default setting being 14, is because of the position trading. That's the number one reason, all right? Position traders are using the quarterly chart for the trading setup, and they are using, the weekly chart for the signal. 1 year is 52 weeks. If you divide 52 by 4, we have 1 quarter. 52 by 4 represents 13 weeks. Instead of using 13 weeks, we are using 14 weeks because of the belief about number 13. People do not like number 13, so they use 14 instead. All right. So there is another reason why, but this is the number one reason why you see most setting at 14. Okay. But we can combine the monthly chart and the daily chart using the RSI 14 on the daily chart, but we must refer to the monthly chart for the setup. We can combine the daily chart and the hourly chart. We are using the RSI 14 on the hourly chart. We must refer to the daily chart. We can use the RSI period 14 on the 3-minute time frame. Therefore, we must refer to the hourly chart. We can use the RSI period 14 on the 2-hour time frame. We must have a trading setup on the 2-day chart. But when we are using the RSI period 14 on the 2-day chart is a trading setup on the 2-day chart, break above retest or break below retest. The opposite is also true. All right, price D below the previous low, break below retest. That will be the bearish trading setup, and the RSI will be overbought on the corresponding signal time frame. Are you with me? So this is why you see most setting at 14. All right. I want to see whether I can see another bearish example to clarify that for new traders. I know most traders, that advanced traders, have already know exactly what I meant by the bearish trading setup, where the price break below and retest a key level. So this one example here, you can see that you see here this level here is a key level. Why? Because the price, you see, it went up and then pulled back and changed direction. So this is a key level. So you can see that finally price changed direction again here with the same level, this line here on my chart. Now the price D below that key level now is retesting it here. All right. So we are on a quarterly chart. This is a bearish trading setup to a certain degree. Setup, not signal. Now let's go to the weekly chart and see whether the RSI period 14 was overbought. In that zone, you can see it was overbought. Let me put a vertical line, by the way, on the quarterly chart before. That's how you do it. On the quarterly chart, we are here. So what I will do, I'll put a vertical line there at that point in time, and then I'll switch to the weekly chart to see what's shown here. You can see that the RSI period 14 was overbought at this point in time. Here this vertical line was overbought at this point in time on the weekly chart. Therefore, we will go now to the 4-hour time frame to enter the trade, break a ball, retested around, and you will notice on the 4-hour chart what you usually see, because we are talking overbought, you see something like this. Quickly, because we don't want the video to be too long, we will see something, the price may be in a rising channel like this, and you will see it will come out of the rising channel, and then will go and retest either the edge of the channel or the median line of the channel, something like that. It may go to retest the median of the channel, even to go back and retest the top of the channel. But very often you see, you may retest the edge or the median line of the channel before changing direction and start popping down, going down. All right. So this is the justification of the RSI period 14. So one can use, to summarize the video, the number one reason why we use the default setting 14 for the relative strength index indicator, or the CCI indicator, is because of the position trading on the weekly chart. The number one time frame for the position traders is the quarterly chart. If you are a professional trader and they ask you what is the number one time frame for the position trader and you do not know, it means that you do not have enough experience. Or for some traders, this must be a bit shocking. You may say, Joe, you are talking a bit of BS now, but this is true because that's how they trade. They trade on the quarterly chart. They are looking for a trading setup on the quarterly chart, the signal on the weekly chart, and the entry on the 4-hour chart. All right. So those are the reasons. So the yearly chart is 52 weeks. 52 divided by 4 will give us 1 quarter, which is 3 months. 3 months is 13 weeks. Okay. So, or 52 divided by 4, we have 13. Instead of using 13, we are using 14. Another reason is about the core value of an item or a security that we are analyzing. Instead of concentrating on the whole item, we concentrate on the core value. So for some traders, it may be a little bit confusing if I'm talking about core value. So here it is. I have this thing, this round here. Suppose, I hope I can do it. I have another circle, So this is something, and I don't know how to put this to you. There is a word for it in French, which we call the noyau. This is the noyau. This is the heart of this triangle. All right. So when we are talking about core value, we are talking about the heart of the item that we are analyzing. So anything that we are analyzing, the heart, or what we call in French the noyau, is 70% of that item. All right. So if we are talking about the core value, we can use the monthly chart and the daily chart. Considering the financial market, the monthly chart is 20 days, not 31 days. All right. We multiply 20 by 70%, which means we want to focus on the heart of the monthly chart, which is 70% of the month, what has happened during that time. So this will represent more what has happened instead of concentrating on the whole 100%, because 30% very often in normal conditions will be a dispersion, will not represent exactly what has happened, but 70% will represent exactly what is taking place. So if you multiply 20 by 70%, we have 14. So we can use the RSI period 14 on that basis on the daily chart, using the monthly chart for the trading setup, and we use the hourly chart for the entry. We can also use the RSI period 14 on the 3-minute time frame. In that case, we are combining the 3-minute time frame and the hourly chart, and we can enter the trade, for instance, on a 1-minute time frame. We can also use the RSI period 14 on the 2-hour time frame. In that case, we must combine the 2-hour time frame and the 2 days chart. This is about the justification of the RSI period 14. Why in the financial market most trading software will set the default setting for the RSI or any technical oscillator at 14. It is very important for technical traders to know why most of these trading software will give you the setting 14. So one should know exactly which time frame is the best time frame to use a period 14 and what exactly the professional are paying attention to. I hope you have learned something for this video also, and we put it to use to make excellent decisions. As always, very important if one learns something for the first time, very important to practice, test it first with a demo account. Once you are ready, and then you can go live. This is the best approach. So do not skip this next step, which is practice, testing, and using the demo account until you master it before going live. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about the justification of the RSI period 14. Speak to you soon.